Okay. Now let's try to see the earnings per share, which is EPS. So earnings per share is how much earning is being available for your equity shareholders or the common shareholders, right? So we go and see what are the earnings available for common shareholders or equity shareholders, and we divide that by weighted average common equity share outstanding. So overall it shows what were the total outstanding shares versus what is the total earnings available for equity shareholders. Now if we go to our P&L above, which is quite above, we are taking this common example from a common P&L here. So let it get loaded for a moment. Yeah. So now if we see our P&L here, so basically what does this say is that our sales was $400 and our cost of goods sold was 250, that gives us the gross profit of 150. Operating expenses was 60, interest expense was 10, that gives us the net profit before tax of 80. Now we have taxes of 30%, which is $24, and finally it gives us the net income of $56,000. This is in thousands. Now what are our outstanding shares within the company? So we can see that we are having outstanding shares of 100,000 shares. So if somebody is earning $56,000 and the outstanding shares against them is $100,000, which means that for every share they are earning $0.56. So effectively every share is earning $0.56, which is shown as EPS here is as well, which is 0.56. So if we go below again and try to see the EPS, we will be able to infer out of that and understand it better. So this is our EPS, right? So this is here. So our EPS here is 0.56 per share. Now why the EPS is used? Because EPS shows how much profit each share of the common stock earned during a period. So it connects company's performance directly to the shareholders' wealth. Now performance indicator is rise. A rising EPS usually signals improving profitability, because if equity holders are earning more, it should reflect in the, I can say, EPS, while falling EPS may be a signal of problems. EPS is used in the price to earning ratio as well. This is an important ratio, people call it as PE ratio in market, that what is the price to earnings, one of the most common valuation tools in equity market. And EPS also helps investors to compare profitability against companies regardless of size, since it's a per share, because per share if you compare different companies, it should give you the relatively understanding. And it also helps for the shareholders to make the decisions about whether to make the dividends, do the investments, or overall returns for the business. Now there are some real world examples, let's see them. So Apple Incorporation in 2023, they reported a diluted EPS of $6.13. So for every shareholders, the earning per share was $6.13. Investors tracks Apple's EPS growth as a measure of continued profitability despite product cycles. So this is used for continued profitability measurement as well. If we see Microsoft, then they have a diluted EPS of $11 around in FY23, and analysts often compare Microsoft EPS against expectations. So the before announcing of annual results, the Wall Street and other analysts do an analysis, and they think based on their analysis whether the EPS will be $12, $15 or whatever, and based upon that expectation they compare the actual EPS on a year on year and quarter on quarter basis. So beating or missing EPS forecast drives the stock price movement, because if expectations are not turning to be true and they are bad in reality, so the price of share may reduce, and if the company performs better than expectations, then the price may go upwards. If we see the Amazon incorporation, so Amazon EPS tends to be fluctuating because of heavy reinvestment in growth. They have very huge investment, and that investment gets the money from the net earnings available to equity shareholders. So, whatever money Amazon earns, they keep on reinvesting it. In quarter 4 23, Amazon reported EPS of $1, which beat market estimates and caused a sharp rise in stock prices.